Hi everyone, welcome to another episode of my blog reading, talking about financial literacy. Every November I post articles and tips to my social media pages. So I am your host, Scott McEachran, a financial advisor based out of Barrie, Ontario, and I'm happy that you've joined me today for another episode. So let's dive in. Today's topic on financial literacy is life insurance. So on my Instagram and Facebook pages earlier this week, I posted the following tip. The tip is, Term 10 insurance is cheap now, but watch out for renewal prices. So let's back up a bit and start with this. The biggest differentiator in life insurance is whether a policy is permanent or for a specific term. Think of it as renting versus buying, where a permanent policy, as long as you pay, stays in force until you pass away, and then it pays out. A term policy offers coverage for a certain amount of time, whether that's 10, 20, or 30 years, and only pays out if you pass away in that time frame. If you live, there's nothing at the end of the rainbow, but you're still alive, so that's awesome, right? I work with a lot of young families, and with that comes really tight budgets. Diapers aren't cheap, daycare isn't cheap, and if mom or dad are still on parental leave, we've got a very limited budget to cover the insurance premiums. Young families need a lot of insurance protection. If a parent passes away, they need to replace that lost income. They likely want to pay off their mortgage and any other debts, the car loans, potentially the children's education, and maybe other expenses as well. So the solution to this is to get a life insurance policy that has a high payout amount, but since it may only be needed for a limited time, like 10 or 20 years until the kids grow up and move out, a term policy is probably best. The cheapest insurance is a Term 10 plan. Most 30-year-olds can get $500,000 for under $30 a month premium. Sometimes, though, the cheapest isn't always best. After 10 years, if you still need the insurance, you'll be 10 years older, perhaps 10 years less healthy, and your new insurance premiums will certainly reflect that. If you know there's going to be a need for longer coverage, a 20-year term probably makes more sense. I say may, might, probably a lot, because it really depends on your specific situation. And I hate saying in general or as a rule of thumb. It really depends on your unique specific situation. But to compare, a 20-year term would cost about $37 a month instead of the $30 for the 10-year plan. So it costs a little more in the first 10 years, but after that renewal period, the 20-year term insurance is much cheaper. I hope I haven't lost you yet. At the end of the day, it's best to line up the coverage with the term that it will be needed for. And the biggest reason that you would shorten the term is if you are a young family on a very strict financial budget and you see your situation improving in the future and you can afford larger premiums later in life when you're more established. Thanks for listening to this blog post, and we'll see you next week.